Everybody, Mike DeSepoli, Heritage Financial Advisory Group. Hope you're all having a great day and a great week. Welcome to the Heritage Market Update for Thursday, June 23rd, 2022. Thanks for joining us today. We're back to update you on the markets and some recent economic developments with some data that we've got about the economy. We had Jay Powell testifying before the Senate this week about monetary policy. And we'll also see some very interesting developments under the hood of this market into some of the individual stocks that we own and that we have held through this difficult period of time. We're starting to see some green shoots and signs of life. So we're going to discuss that with you here today. So first, let me put this into context. Let's start with the NASDAQ. Right here is the NASDAQ over the last 6 months, over the last 9 months, right, and over the last 2 years. Okay, so we're certainly backwardating some of the gains coming out of the pandemic, but let's just focus for a moment on the last 6 months, right? So we have seen a pattern in the market of lower highs and lower lows. The market tries to get momentum. It's unable to do so, and it goes on and makes a new low. Now, when you look at a correction or a crash or a bear market, whatever you want to call this, because ultimately they're just labels, there are different stages to it, right? We talked about this in the early stages that some of the growth stocks came under fire first. Then they moved on to some of the retailers. Then the selling moved on to some of the fan favorites like the Apples, Amazons, Googles, etc. And on the recovery side of a bear market or coming out of a bear market, there will be stages as well. So history suggests to us by looking at past occurrences that the NASDAQ tends to bottom on average 2 to 3 months before the S&P 500 bottoms. And a lot of the stocks in that sector, growth and tech, tend to lead the charge higher. So what we've been looking for is signs of positive divergence in the market, which is characterized by stocks, individual stocks that are starting to act, let's call it with a relative strength to the market, right? Where the market still looks a bit weak, but individual stocks are starting to firm up. We think that's what we're seeing, so let's walk you through it, right? So here's the NASDAQ. Okay, the NASDAQ made a new low last week on June 16th and has since then bounced about 6.6% off of that low, basically taking us right back to where we were at the end of May, right? So a lot of angst, but not a lot of ground has been gained or lost. But what's very interesting is if you look through our strategy at some of the individual stocks that we own currently and have owned in the past or are adding to now as we go through the cycle, you'll see that their moves off the low are quite different. So just keep this in mind, right? NASDAQ 6.6% off the low. So let's take a look at Zoom, right? When we look at the chart on Zoom, we have a much more constructive looking chart. And also one thing you're going to notice about all these stocks that I'm showing you is even though the NASDAQ made its recent low on June 16th, all these stocks have one thing in common. It's that they made a low on May 12th and have since held above those lows. So when we look at Zoom, right, making the May 12th low at about 78 and change, it has made a very nice and swift move in a short period of time. So you look at Zoom up 46% off its low with the NASDAQ up 6% off its low, right? So a strong outperformance. And again, we know Zoom has been through a lot. It's been through a tough period. But folks, for a bottom to form, first a base has to form, right? Which very much looks like what we see here. And then we have to start getting some momentum. And this is being spurred on by the fact that Zoom had a good earnings report and they raised their forecasts for the next quarter. So kind of telling the street, everybody relax, our business is just fine. So let's take a look at another one, right? Chewy. Chewy has been through the ringer. Chewy has had a very tough, really call it last 12 plus months or so. But again, Chewy made a low on May 12th, about $22 and change, and has since made a very nice move to 36, a 63% gain off the low for Chewy. Now again, folks, we get it. There's a long way to go. Really to make up to get back to where we were last year with a lot of these stocks, and we fully believe that they will do so. But again, NASDAQ up 6% off the low from June 16th, Chewy up 63% since May 12th, okay? Let's take a look at another one, Palantir, right? Palantir was something that stock couldn't do anything right. For all the great tech they have, couldn't do anything right last year, okay? May 12th low, around 6.5, and has made a nice move to, let's call it 950, right? So Palantir up 46% off its low, NASDAQ up 6%, okay? We got two more for you. Let's keep going. Roku okay, significantly off its low, not as much as the others, but again, we look for the same pattern. May 12th low in a lot of these growth stocks. We see Roku basically coming from about 75 to 96, up 28% off its low. Again, still a lot of work to be done. We're not trying to sugarcoat the situation here. Markets still have some work to do, but this is how bottoms start to look. This is what you want to see, and you want to start to see the stocks that couldn't do anything right start to look like they can't do anything wrong. So again, it's a nice positive divergence, as we would call it, some nice outperformance with Roku. And we'll just throw one more at you. Look at Plug Power. Okay, same thing, right? May 12th low, around 13 bucks and change, closing today at about 17.90. So Plug Power with a 40% move off its May 12th low, while the indexes still look weak. Okay, so this is the signs that you want to see. And the reason we want to share this with you is because as the indexes start to break down, investors that really don't focus on the individual components of their portfolio, they're just watching the news, reading the newspaper, they start to feel more angst and anxiety that, oh no, markets are making new lows, right? My portfolio must be making new lows also. So that's why we want to share with you some of the individual components that are starting to show some pretty substantial relative outperformance. And we think a lot of these stocks are base building, right? Because they've gotten so cheap. Now investors that really just wanted to sell them are starting to buy. And that's why we're starting to see these price movements. So again, this is a step in the right direction, right? But if we take one step forward and two steps back, what good was it all? So we expect this momentum to continue. It's not going to be in a straight line, but these are the signs of life that we want to see from some of the stocks in this market. Now, I want to share this with you quickly, right? So when you hear investment professionals like us talk about how this is really a generational buying opportunity, it's because when you look at the data, the first half like we've had does not happen very often, folks, right? So if you look at, this is the price return, I know it looks like a mess, but all cumulative years drawn onto one chart, right? From start to finish, January 1st through 12/31, what each year looked like. And the blue line is the year we're living through right now, right? It's been very tough. It's not often you see the market down 23% at basically the halfway point, okay? But history suggests that unless, right, we're going to go the way of 1931, where we're going to finish lower than we were at the half-year point, which seems to be the outlier in this case, that markets over time will reverse a lot of these sharp declines. And when I say over time, we don't mean over a couple days, a couple months, if not into the next 2 quarters. But we do expect that this is a substantial generational buying opportunity. It's not often that stocks go on sale like this, that good quality stocks go on sale like this. Remember, folks, this isn't .com where these companies had no business backing the stock price. We have a lot of great companies in this market that are on sale, and we plan to take advantage of other people's stupidity, right? That's what we've always done, and that is what we will continue to do. Another thing, let me just move myself out of the way, right? We talk about how inflation has been the problem that has persisted in this market. It's caused the Fed to try to come through this market like a wrecking ball. So naturally, when inflation peaks and start to roll over, it's going to be a positive event in the stock market. So when can we expect that to happen? Well, when you see data like this, consumers talking about the areas of spending that they will pull back on because that prices have been persistently high, this is how inflation is going to come down, folks. I hate to see investors or consumers spend less money, but these are business cycles, right? Jay Powell testified in front of the Senate this week, and he finally said the quiet part out loud. He said, look, our tightening policies are likely going to cause a recession. It's not what we want, but it's likely what's going to happen, right? And the reality is, folks, they know that they need to cause a recession to bring inflation down, right? Because the Fed can't control the supply chain out of China, and the Fed can't control oil supply outside of our country. There's a lot we could do with oil supply in our country, but that's a conversation for another day. So when you look at consumers pulling back like this, it is eventually going to show up in inflationary numbers coming down. And that's my biggest gripe with the Fed. They read inflation using lagging data, right? So by the time inflation peaks and we have the data that suggests it already has peaked, the peak would have been probably 30 days prior, but the data is lagging. So the market will catch up with this eventually. We're very confident in it that inflation has reached that inflection point. The bond market is starting to suggest it. The oil markets are starting to suggest it. We're going to take a look at that now. When we look at the last week in the market, and just trying to find a good place for myself here. When we look at the last week in the market, right, we are seeing the right areas rally, and we are seeing the right areas fall if we want to see inflation fall, right? So we look at the inflationary areas that have benefited from inflation, right? Financials were down this week, but energy, right, folks? Look at these returns on a week-to-date basis in energy. We're seeing big energy companies down 8, 10, 12, 15%. Now, yes, they're up tremendously over the past year, but if inflation's going to peak, oil's going to peak, and this is what the start of that would look like. So one last thing, let's do a check on investor sentiment here, right? Let me get back up to the top. Our fear and greed index. How are investors feeling? They're still terrified, right? And really, who can blame them, right? I don't blame investors for hating this market one bit. We're still in extreme fear categories. Any rally really hasn't had the momentum or the ability to stick, right? Which is making investors nervous. It's seeing a lot of these big intraday swings. And even today, today was a good day in the market. Markets finished up near the highs of the day, up about, let's call it about 1% on the S&P, 1.5% on the NASDAQ. But the type of activity, actually, I'll show you that real quick. Look at our intraday activity, folks, right? This is just the type of market that we've been living in. Market opens, it's lower, then it rallies back and we go positive, then we sell off, we go negative, and then we rally into the close like a hockey stick, okay? This is the type of volatility that's normal in a bear market. Nonetheless, we are going in the right direction, right? This week, again, seeing the market move up off the lows. Still a lot of work to do to try to recapture some initial support levels, but we think we are seeing the right activity in the right stocks, right? So the stocks that could do nothing right in 2021 and into 2022 are starting to become the areas that investors are seeking out for outsized returns. So the questions that a lot of folks have asked, right, some of these stocks that are down, how long is it going to take to get it back? How until we're making profits on these things? And, will it ever come back, right? All the questions, good questions, not, certainly not hating on the questions. But when you see the speed of some of these moves, when you see a Zoom rally, 63% off the low in basically 5 weeks, it speaks to the velocity that these stocks can have when they get moving. So we certainly saw the velocity on the way down, but remember, folks, let's not forget what Zoom did, right, in its infancy. From 2019 into 2020, long before pandemic started, folks, Zoom was running tremendously, and this is just one anecdotal example, but when these stocks get going, they can have velocity. So Zoom did it once. I'm not saying it's going to do the same exact thing a second time, but let's not act like this is rare air up here that can never be achieved again, because it certainly can be, and we think at some point in the future it will be. So if you have any questions, reach out to us. Always here to talk to you about anything that's on your mind. Just wanted to give you, a constructive view of what we see in the markets and how we see some of the stocks that we're following develop. So reach out to us with any questions. We'll see you back for the next Heritage Market Update. Take care.